Good day, guys. Good day, guys. Once again, good day, guys. Once again. So I would just like to take you through the trade that I gave in the VIP signal group today for US30, simply applying our smart confluence trading 3.0 strategy. Simply applying our smart confluence trading 3.0 trading strategy. So for those that might want to follow us on Instagram, you can follow us on Instagram. That is our Instagram, new Instagram account that we opened specifically for educating people and raising millionaires. This Instagram account is specifically for educating. If you check every time we post analysis, we post setups, we post every educational thing that you can ever get. So go ahead and follow us on Instagram at KingMichael_01. Yes, that's where we're going to educate you on a daily basis, educate you through our Instagram platform, as well as we'll be educating you on this YouTube channel. So make sure that you are following us on our Instagram. Make sure that you're following us on our Instagram. So back to today's trade. Today we took a buy. We took a buy on US30. We took a buy here. We took a buy there. My stop loss was just below the zone. First target. This is just first partial target. This one. First partial target is there because obviously I was expecting price to drop again once it reached there. So far on US30 today, so far we've managed to bank something like 339 pips. 339 pips on US30. 339 pips on US30 so far for today banked. So how did I get this buy entry? I just want you to look at what I'm going to do just now. Started from the 4-hour. I looked at this from the 4-hour. Looked at these things from the 4-hour. Looked at things from the 4-hour, right? 4-hour, if you can check on the 4-hour, to the left on the 4-hour. If you look at the left on the 4-hour, to the left on the 4-hour, you realize that here, as this market was moving, we're downtrending, as you can see, lower highs, lower lows, lower highs, lower low, lower high. Then here we made a lower low. Then this lower high now was broken. As soon as a lower high is broken, that is what we call a change of character. One can call it a shift in market structure, whatever. So the shift in market structure happened here, happened there, being caused by this order block here, as well as, being caused by that order block. So that order block resulted in the shift in market structure to the upside, right? So once I've analyzed where my shift in market structure is on a 4-hour or a daily perspective. I also look for levels of imbalance or a fair value gap. A fair value gap, for example, here, this candle, one candle, second candle, third candle. In between here, the high and the low, the high of the first candle and the low of the last candle. Look at 3 candles. That is how you identify a fair value gap. You are having something like this. You're having something like this. Let me say this is the candle in between candle. Then you're having something like this here. Then here you're having something like this. Right. Let me just put a wick. Something like this. Then here, let me also put a wick. Right, like that. Wick, that's a wick, guys. That is a wick. That is a wick. That is a wick, candle wick. This is a candle wick, guys. This is a candle wick. Right? These things of drawing. Okay. Let me just put it like that. Right, candle wick there. As you can see, candle wick. right? Candle wick there, candle wick again there. So I'm saying, what am I saying? How do you identify a fair value gap or an imbalance? This is how you do it. When you're having three candles like this on the market, right? You're having three candles like this on the market. You're having three candles like this. Price pushing all the way to the upside or to the downside, whatever situation that might be. You discover that we have the high. Where is the high? The high of this first candle. And the low of this last candle. Right, that is what we call a fair value gap. That is what we call a fair value gap. That is what we call also an imbalance. Fair value gap or an imbalance. We call it a fair value gap or an imbalance. Once you have a fair value gap like that, most of the times you discover that here, that is where maybe you can have your order block, whatever order block, somewhere here. That would be in a different color, obviously. Obviously, it would be in a different color. So, fair value gap, order block, fair value gap, order block there. So you'll be having this order block, having these three candles like that, fair value gap and order block. These are two major important confluences that you might actually use whenever you want to enter trades. Either use the order block scenario. So order block is the last bearish candle before a bullish move. So when you're entering such a trade, obviously what you do, you mark out the order block like this. You just remove the color. You mark out the order block just as I have done like that. Right, you mark out the order block like that. So soon as the market goes, it also created this, left this imbalance or this fair value gap. And it continues going. What I know that is that in the near future, this thing is going to come back, depending on the time frame that you are analyzing on. So once it goes, I'm expecting it to come back before continuing. So what I do, I always prefer the fair value gap and the imbalance, the combination of the fair value gap or the imbalance and the order block. That's a very beautiful combination whenever I want to enter. So I enter my long position exactly on the fair value gap. So at the end, you can get it there. There on the order block and the fair value gap. Once you get it, your stop loss is just below the order block. There you place your stop loss below the order block. Then for someone who wants a riskier entry, they can put the stop loss just below the fair value gap. Once you get the rejection on the fair value gap, that's where you can actually enter your trade. Your stop loss just tied below your fair value gap. Then your TP, you're looking to the next level of imbalance or next level of order block or next level of buy side or sell side liquidity, depending on which side you're trading on. So that is how you identify fair value gap and imbalance. Fair value gap here for hour, I had a fair value gap, imbalance, also had an order block, right? Once I've identified that and also a shift in market structure, once I've identified that, I go to a lower time frame. Went to my 15-minute. On my 15-minute, what I want a shift as well. I want to see the same thing happening on the lower time frame. That is what we call fractality in the market. When what is happening on the higher time frame has to happen on the lower time frames as well. So yes, you can check. We're moving down, lower time frame. We're moving down, broke this low high, change of character, which we call change of character there. So broke this high. After breaking this high, I was looking at this order block. This one was tapped, this one. I was also looking at this order block here. Order block there. There's an order block there and also a fair value gap on that zone that I marked. So that one I now entered now on the smaller time frame using the confirmations there. If you look at this, that's an order block here. Order block, fair value gap, order block, fair value gap. entered this buy all the way. First TP has been reached. Now I'm expecting price to maybe pull back to this imbalance of fair value gap because there's broken market structure. After breaking market structure, we always have an order block. So you have an order block there and an imbalance and a fair value gap. So roughly I'm expecting a buy as well here on this fair value gap. My stop loss just below the zone, just below the imbalance and the order block. So once I enter there, I'm looking for my first target to be here. Second target, you're looking at the imbalance or the fair value gap or any order block at the top there. So here I can actually see that we have a fair, we have this buy side liquidity here. So that can also be used as a target for these buys. You can actually use that as a target. You see that risk to reward 1:9, 1:10. So right now we're expecting a buy as well here on the imbalance of fair value gap. Same thing we did here, imbalance fair value gap, we enter all the way. Fair value gap, imbalance, we enter, we go all the way. So that is how you trade using fair value gap imbalance. Also identifying shift in market structure, break of structure, change of character, all those sort of things. That is how you can actually use them and make money on any instrument that you may choose. So right now, I'm still waiting for the buy to kick in, then we jump into the trade.